But we're also tracking shares of CRM here on the day. Salesforce, and they're moving lower right now by about 1.4%. This is following a downgrade to Underperform by the folks over at Bernstein, saying that the software company is falling into growth purgatory. Bernstein also slashed its price target on Salesforce from $134 down to $119 here. And they pointed out a few things within this note, but specifically, I think it does come back to what many others have cited in this, either seat count compression as it hits on headcounts and that headcount reduction for some of the portfolio clients for Salesforce or CRM, what that means for the actual license base that Salesforce has really relied upon, plus the acquisitions and those now being accretive to the business. Where do they kind of seek out new opportunities, and how might that be scrutinized given the acquired growth strategy that many of the ERP players do have right now?
Yeah, this is top work by Bernstein analyst Mark Mordler, 38-page report, very extensive, and bringing a lot of key issues to light. One, I think, takeaway from this is what Mark notes at the top of the report, that of course, Salesforce last week announced a 10% workforce reduction. I think Mark is trying to argue, as you get rid of those workers, that top-line growth will slow, and even though you get margin improvements by laying people off, they may not be as great as investors now expect. Very key takeaway that Mark's making there.
Yeah, won't really help margins.
Absolutely. We're going to continue to watch all of those companies' shares.